Thank you, Raida. Um, Honorable Finance Minister, if she's still on the line, Mr. Akif Saeed, Chairman SCCP, Farooq Saab, Lukman Saab, uh, respected seniors and respected colleagues, Assalamu alaikum. Thank you so much, Farooq Saab, for giving me the opportunity to be speaking here at this occasion. I would really like to congratulate you for putting together this August gathering today, which really takes forward the motto of the expansion in the IPO market that the PSX has been working on. I would really do like to mention the efforts that we've seen from the finance minister from the day she has taken up the portfolio of the finance minister in this caretaker government, that she has worked very, very hard to make sure that this is a big focus area. So we also want to thank her on behalf of the fraternity for taking up this important topic of capital formation and deepening of the financial markets in Pakistan. Coming to the topic that has been assigned to me, listing readiness, business plan, long-term predictions, and QCR audit, not necessarily in that order, but my job has been made easier because a lot of the speakers have already touched upon many of these topics before me, so I can shorten my speech and also help Raida catch up the schedule that has happened. So when we talk about listing readiness at JS Global, when we talk about listing readiness, we look at companies beyond the lens of just regulatory requirements. I think it is very important that we realize that just going for an IPO is more than just raising an investment or going for monetizing an earlier investment that you had made in any project. It is very important that you look at it from multiple facets, and not just that we look at companies this way, we recommend to them as well that this is how you should gauge and prepare for your preparedness for an IPO. And we basically divide it into three parts. One is the regulatory readiness, the other is the mindset readiness, and the third is financial readiness. So if I was to just go on to the next slide. So in terms of regulatory readiness, I think I will not delve into this. We put up a small list of things that need to be done for the regulatory readiness of a company. It's not an exhaustive list, but I think Raida has already given a lot of color on that. And in letter, what you need to do as a company to be ready for an IPO was discussed by multiple speakers. What you need to do in spirit, I think that interloop very nicely explained that when you do go for a board composition, you have to go over and above the minimum requirements. So I'll not spend a lot of time on the regulatory readiness. And as I said, this is not an extensive list. I will move on to this next slide where this part of the readiness is not part of the law or constitution or any regulations. But we believe that this is the most important part, probably the most underappreciated and the least talked about. But we place a lot of emphasis on the mental readiness to gauge that why is a company coming to the market? What is the purpose behind going to the listing? What is their perception of operating as a listed company? And what do they feel that life will be after they go public? Because when we talk to them, as I said, it's definitely not a fundraising exercise. What we've always said to our potential clients is, this is a transition. This is graduating your company to the next level. You are going from becoming a finite entity to a perpetual entity, an entity that is going to last beyond potentially your generations. And as was discussed in some of the earlier sessions, segregate the management and the ownership of the company to avoid any conflict of interest going forward. What you also need to be mindful of to make sure that you're mentally and mindset-wise ready to go to the market is realize that all of these new investors coming in are your partners. We feel that this is a very big realization that needs to be inculcated into any companies looking for an IPO, that the people that are coming in are going to be your partners in business, and they deserve the same respect that a private equity investor or some of your initial business partners are given by you in your business. So do not treat them in any way inferior. That's one of the key important things you need to have in mind before you embark on an IPO journey. Finally, in terms of the mindset readiness, are you willing to be transparent? Because we generally believe that transparency is something that gives you a premium in valuations, not just in the short term, but also the long term. Finally, moving on to the third part of the readiness, which obviously kind of is also linked to the regulation, is the financial readiness of the company. So as was discussed in earlier sessions as well, there is a minimum requirement of having a 200 million paid up capital post the listing. But again, if you do have the adequate retained earnings, it's not necessary that it reflects in your paid up capital right now, but that's a criteria you can meet very easily. Similarly, to be ready for the IPO, you also need to have a certain percentage of that company floated to the market, and the PSX and the regulations give you that flexibility that you can do it in phases and come out with a very small portion in the first part. I think even in the financial readiness, the second part is very important. Fareed Bhai had touched upon it in his session, is that you need to have an investment case that you communicate to the market, which is solid, consistent, and credible for the new investor. Something that can stand the test of questions, something that is in line with what you've done or what your macro environment is suggesting. So as we summarize it internally, I mean, the investment case of your IPO needs to look good on the colorful PowerPoint slide, but it needs to make a lot of sense on the MS Excel as well. So your numbers should be so robust that they are not, they don't have a credibility question when you present it to the company. So before coming to the IPO, a major part of the readiness is exactly this, that you have an investment case that's very credible and can stand the questions. One more thing that we always communicate to, in terms of readiness is be ready to explain your business model to your incoming investors. There is always this very lazy excuse that we hear from, that we have competitive considerations. I mean, we believe that, rest assured, your competition knows a lot about your business already. Do not shortchange your new coming in partners and embrace them with a lot of clarity and transparency regarding your business model, because that leads to familiarity. Familiarity leads to comfort, and the comfort and confidence leads to better valuations when you come to the market asking for new capital. The third part about the financial readiness, and that's also links into one of the topics, is the reliability of numbers. Now, this was discussed. I think Fareed Bhai mentioned B2C businesses. So if there is a B2C business, a milk manufacturer will get a recognition value from day one. Maybe a petrochemical company will not get that recognition premium on day one, but there is one area where all are common, is the authenticity of your historical data. So when you talk about future projections, there will always be sensitized. People will debate whether your number is right or not, whether your 30% earnings growth is aggressive or it is realistic. But one thing that should be beyond debate is the authenticity of your historical numbers. Now, how does that come in? That comes into our topic of the QCR auditors, because they basically provide you this stamp of authority and stamp of approval that whatever you have presented in terms of your historical financial performance is absolutely beyond debate and is accurately reflecting it. So again, the regulators have made the job easier, because the credibility of the auditor itself is also a problem, right? Because whoever's signing that audit report needs to have that credibility. So when the regulators have provided the QCR audited list, that makes it very easy to pick up the relevant auditors and choose one for your for taking the company public. So just to wrap up the topic on readiness, I think we divided into three parts. As I said, mindset readiness, regulatory readiness, and financial readiness. And on that note, I'll just conclude my talk. But one point just on the auditor, I think one of the things that we all end up doing is appointing the auditor that looks the most convenient. I think please don't do that. Appoint the auditor whose name you would find comfortable reading on someone else's report and find the report credible. So I think that's an important point. And on that note, I'll just end my speech. Thank you so much.